Good evening. What's up? Hello. Hope everyone's well. Had a nice, restful weekend. I fell asleep in my chair last night, so that tells you a lot. Audio good, but I can't see you. I mean, I'll take it. AV good? Thanks, Flary. Hope you're well, mate. Excuse me. How's everyone doing? Hope things are going in the way you expect them to, or something like that. All that good energy, positive vibes, other white girl slogans. It's a bad morning. Why is that? Can't believe I've been watching Cred for over 3 years. Me neither. Thanks for sticking around, Mantis. Okay, cool. Let's begin, I suppose. First things first, make sure to like the video, subscribe to the channel, all that good stuff, and thank you for being here, of course. Second of all, while we're going through thank yous, Bybit is the show's sponsor, so thank you to them for their support. Their links are also available in the description below. So, there's plenty of things to talk about. Nate Russell says echo in your voice. I don't believe he's correct, but if anyone could either confirm or deny, that would be cool. I'd be very surprised if he's correct. No echo, there you go. Fiction. FUD. Anyway, so... yeah, okay, thank you, I got it. As you can see by the title, we've had 1.4 billion longs liquidated during yesterday's dip. It'd probably almost be better if you slept through it, because it's essentially been retraced on Bitcoin, but also on altcoins have more than retraced it in some cases. So that obviously adds some color and context to those liquidations. As Pretty Panda says, if you slept in today, there was no dump. Yeah, that seems to be correct. So let's talk about it, right? So if we look at, I'm using Coinalyze here. They're really cool. I like their data. I'm not sponsored or affiliated, but I like to pay attention. So this is where I'm getting my global charts from. And if you go down to liquidations, we can see, shows you both sides of the market, a total of 1.42 billion longs liquidated across the market, across all exchanges. Now, interestingly, if you go to Bitcoin itself, so 1.4 total, but if you go to just Bitcoin liquidations, it only accounted for 368 million of the 1.4 billion liquidations. So Bitcoin 368, ETH was 250, right? So the remainder of the liquidations actually came from altcoins, which is kind of expected, but I think from a percentage or proportional point of view, it's really high, highly skewed towards altcoins more so than usual. And if we look at the exchange data as well, I'm using bybt.com for this. If we look at the exchange liquidations over a period of 24 hours, Binance is leading, right, in the liquidations. Now, part of that, of course, is because of the volume that gets traded on Binance. So you'd kind of expect if the market moves to show up there, so to speak. But it's also the fact that it's kind of one of the premier or most popular places, I should rephrase, one of the most popular places to trade altcoin futures or just altcoins with leverage, right? So if altcoins are getting rinsed and dipping really hard, those liquidations are going to hit on exchanges which offer altcoin futures, and probably one of the most popular places for that is Binance. Interestingly enough, if you look at, for example, FTX, which also has a lot of alt USD pairs, their liquidations were far less, but also they've got a different collateralization system, and generally FTX tends to do less liquidations as a percentage of volume, tends to be a lot lower for FTX for several reasons, collateralization being one of them. If anyone wants the link to that, I'll just throw it in the chat as well. So that's kind of the context we're dealing with. So when it comes to liquidations, if we're going to make broad sweeping statements, which I'm not a huge fan of, but, you know, just to set some first principles, I think when you're trying to learn, it's generally helpful to start with first principles, and then you filter in the exceptions. It's kind of like learning a language, right? You learn the grammar, and you learn the rules first, and then you learn the exceptions to really get that edge. I think with trading, people make it pretty weird and go the other way around. They try to learn every single exception and then don't actually have a broad baseline with which to operate, right? Which is kind of counterintuitive, but what isn't, right? So, broadly speaking, if the market is really bullish, right, and there's a lot of leverage trading done in that market, when you get these big liquidation events, those are typically bullish and or for buying. The dips that they cause and the forced selling that's initiated as a result of those liquidations generally presents a good opportunity to position for at least a bounce, if not higher time frame sort of trend continuation, right? So one term that I used and that gets thrown around a lot, which is correct, is that when the liquidations are forced selling, right? So, for example, if you're long, price keeps going against you, and maybe if you're long inverse futures, the value of your collateral goes down as your position goes down further as well. When you get liquidated, which is your position being forcibly closed by the exchange, the whole point is in the term forcibly, right? It's not you closing out at a price that you think. It's at that point the trading engine takes over your position and closes it for you, right? And if you're an isolated margin, you lose the position and the maintenance margin you had for that position. If you're on cross margin, that's your whole portfolio gone out of the shitter, right? So that's where a lot of that asymmetry comes from. Generally speaking, like, you really shouldn't be getting liquidated kind of ever. It simply doesn't make sense. Even those who argue that you should use your liquidation as a kind of stop-loss type of thing, you really shouldn't, because it will get closed early. Donald has a really good article about that. In order to keep some of the margin for your position at least, right? You want to be stopping out as opposed to getting liquidated. Anything that creates circumstances where the position doesn't get forcibly taken over by the liquidation engine is a good thing, right? It may seem like a small difference, especially if the prices are similar, but using your liquidation as your stop is just absolutely fucking mental, right? Kai is saying, this market is bearish as fuck, funding is already reset, apes will never learn. I don't know, man. This is some doomer type of things. Like, if you have arguments for why you think a March type of wipe is coming, I mean, you could, of course, you're welcome to make them in the chat and all that kind of stuff, but I don't know, like, the doomsday prophecies have been wrong for a while, and I think some better evidence needs to emerge for me to be compelled in that way. And I mean, even today is a good example, right? You've got a bunch of long, like, if the market's truly bearish and you get like a liquidation cascade, what will typically happen is you have the big overextended move with a ton of those liquidations and forced selling, etc. You get a bit of a bounce coming in as a result, but then really any technical structure or any sort of bounce that gets sold, on the reversion from that excessive selling, that gets sold into as well, and no new longs open up, right? And the cycle sort of keeps going. In this case, I would at least present that we haven't had that type of behavior. If this is the beginning of a leg, right? That's the whole point, right? The argument being made. I didn't understand the difference between liquidation and stop loss. Jesus Christ. Okay, so a stop loss is you putting an order in the market that I want to get rid of this position if XYZ conditions are met. And ideally you do that in a way which is predefined and you sort of know why you want to exit at that price. A liquidation is when the choice is out of your hands, so to speak, and the exchange forcibly closes your position for you. So there is a slight bit of a difference between a liquidation and a stop loss. So yes, I mean, maybe that's something to Google and come to terms with. I would suggest if you are unable to distinguish between a liquidation and a stop loss, maybe take a break and become comfortable with the instruments that you're trading, and then maybe come back. That's That's one of my suggestions. Sorry, that shook me a little bit. Anyway, so okay, so we have a bunch of liquidations, and the argument I was making that, look, it's not always the case that liquidations and then the market reverses because everyone's been stopped out or everyone's been wrecked, right? That's no guarantee. Sometimes you get liquidations, as I mentioned, like on one leg, right? So one leg down has a ton of licks, you get a bit of a bounce, and then the selling just continues, right? When that kind of structure happens and that one liquidation event, so to speak, isn't enough, that's when you know that the high time frame participation looks kind of different, and it's more so than just a flush, so to speak, right? Whereas when you get the type of liquidations where it's a really fast move and then it's bid up really aggressively, I mean, that's quite different from a market which shits, bounces a little bit, and then shits again, right? I would humbly suggest that these are two quite different things, and the contexts are accordingly also very different. I think we can look at Bitcoin now with that context in mind. Okay, Kai, you're just, I don't know, man. It's just kind of almost bad faith at this point. Oh, I think I muted someone else. There we go. Yeah, look, if you want to come here and talk doom and gloom, that would be fine. Just try to make a case for it as opposed to preaching about how, oh, it's all over, it's all coming. This isn't some bloody doomsday cult, right? If you're making an argument for continued bearishness, make it, but don't talk out of your ass. It's just really boring. Okay, so where is that left Bitcoin, right? So one thing you always want to look at when it comes to these sorts of fast-moving liquidation events is where is that left the market, right? Where are we now? What has changed structurally? What levels have been broken? Etc., etc., etc. For now, it doesn't look, I mean, yeah, in an area of resistance, etc., etc., but the prevailing theme is that a lot of that dump has been retraced, and if you look at altcoins especially, which kind of led the liquidations, some of them have actually gone on to make new highs, so as if the dip never happened. I mean, I don't know how you interpret charts, and there are a million ways to do this, but seeing something like this big nuke, final capitulation spike sort of thing, and then a higher high, I find it really difficult based on the tools that I use to make a bearish case for something like that, right? Even if you look at the daily candle here, like, does this look like bulls are offside and they're going to get rug pulled? It doesn't quite, I don't arrive at the same conclusion at the moment, right? That's probably the most reasonable way I can put that. So let's go over the majors first of all and see where things have landed. So just context that I think is important is that the weekly time frame looks insane, right? It looks really strong, and the reason for that is, as I said in my short YouTube clip video, we had a 3 to 4 week consolidation, which we didn't have anywhere kind of since the all-time high break. So this is the first time we actually formed support on this time frame, right? You'll know if you watch kind of some of my other stuff, support is formed horizontally and not really diagonally, right? So you want actual, you want price to spend time in a range, positions to be accumulated there, volume to be transacted, etc., and then a move away from that area of balance, if you will. And those are the types of structures which actually make for reliable trading structures. We didn't have that again on the all-time high break. You just literally had red candles. Admittedly, I literally got long this. I said literally twice, 3 times now. It's a dog shit word to use. I got long this level here because it's kind of the best we had on the way up. It's like a red weekly candle had to do when it came to support. So on the way up, on the weekly time frame, didn't form support anywhere. Now I'm satisfied because we spend 3 to 4 weeks in a range, and if we look at the weekly close, which we kind of have to because it's Monday, we broke out of it pretty impulsively. What I think is especially convenient is that we now have a high time frame weekly structure that can actually be relied upon, right? So from a high time frame point of view, I think any dips into the, especially from like a less trader specific and more kind of investing or fiat allocation or directional bias, etc., I think generally as long as this holds on any dips as support, and again, where those dips come from, who knows, right? Could it come immediately from here? Sure. What if it goes up, 20, 40, 50% more and then dips into there, I think either way the conclusions are going to be the same, that as long as this support remains intact, trend continuation is very likely, right? And even for the shorter term technical traders, I'd really love to play bounces and do business at within this old range. 38 range high, 32 range low. Those are really good high conviction levels where I'd want to trade either way. Like even technically on the bearish side, for example, you know, if we come down and fail below 38, I would be comfortable with a short term idea taking price from one side of the range to the other, right? Either way, I mean, the theme should be generally obvious by now that I like this structure, and I think it would pay dividends to pay attention to it, especially from a high time frame point of view. But the weekly context surrounding it is pretty good, right? Range, huge breakout, and that's your support now. So I think that's worth bearing in mind at the very least. Now the daily time frame, again, it's kind of retraced the whole dump, but we also want to see where it landed or what's going on. For me, it's a daily support still, right? The same logic which we kind of discussed on the weekly time frame. We have a big move up, a consolidation, big move up, with this kind of sandwiched bit of price action, or the range that occurred between two impulsive moves, acting as support. I think we can have a version of that, or at least I do, on the daily time frame, which is this consolidation here. Slightly tighter levels to work with, which is always cool. Upper boundary at 46, which is where support has been found recently. Lower boundary at 44, 45, which is untested for the time being. But on a daily closing basis, right, support is holding for now. So I you know, there's nothing bearish about this in its current form for me. Or even if there is, nothing I can act on, at least on the daily time frame. For some reason, people are still looking for bearish cases, which is fine. I think it's worth being aware of from a point of view in validation. As mentioned, I think for me it's pretty straightforward. This is support and it's close to price. If we break down below 45k, then I would say, okay, we have a daily time frame break of support now. We have weekly levels below us that will be cool to test. And there's a lot of leverage. I mean, even after the liquidations, a lot of leverage was built up into and post this kind of Elon Musk all-time high candle. So I'd expect if support were to break, would probably start filling in a lot of this candle and retracing the breakout, and that would come with its own open interest flash, etc., etc. But that's kind of in the future, right? For the time being, where's support? For me, it's a 46 to 44. As long as that continues to hold, continuation higher is likely. On the trading side of things, so I've traded this level twice now. Both times sort of in it, not great, but I mean reasonably, right? So I bought this dip into here, closed it early into the first trouble area, and even last night bought the same level once again and closed it into this cluster. So you can see in both cases, ultimately exit was here, price made it all the way to the range high. In this case as well, exit was within the cluster, price more or less retraced much higher. So it's whatever. This is like short-term trading that I'm not terribly concerned with, given especially because my exposure is primarily in Bitcoin. But this kind of just adds some lower time frame color to the higher time frame picture. That for the time being, 46k is support, and it seems to be doing its job for the time being, right? I really wouldn't mind from a trading point of view if, for example, price doesn't break out here, and it is, I mean, arguably. Well, less arguably, it is at lower time frame resistance, right? We're dealing with lower time frames. Even if we just take this breakdown level, you've got a level of resistance here at 48 or thereabouts. Not one that I'd look to sell, but if one way or another, price comes down to here once again for the 1, 2, 3, like a fourth test of 46k. One trade that I'd quite like to do. I'm not sure if I'd rebuy 46 for the fourth time, potentially. I can't say without looking at it. But one trade that I would be keen for is actually to play a bounce off of 44 if it gets there, right? So if price were to come down to the upper boundary, because again, this is the daily range, right? So treat it as come down to the range high. If we get a move down from there, I'm quite a big fan of trading do or die type of levels. So anything in the 44s, I think would probably give me at least a bounce either to the top of the range or even the midpoint. So for anyone who gives a shit about the actual trade planning point of view, I've already taken 2 trades which were reasonable. And again, this is like low time frame stuff. Reasonable at this daily level. I probably wouldn't take it a fourth time. Where I would trade the long side if it gets there, at least for a lower time frame bounce, is 44k. You had limit orders at the level, yeah, but the way I do limit orders is a bit different. I'll let price come into the level first, and then if I want to buy it based on the initial reaction to some extent, or sometimes even without the initial reaction, but I'll still use a limit order for the most part to get in, even if I'm leaving it a few dollars or a few points below price, so to speak. So I still want to be the maker when it comes to doing business at levels if I can, because fees just have a really big impact on your trading costs, especially if you're trading these lower time frame moves. Like, I wasn't getting in and out for big moves. So if you've got less to capture, you need to be more cognizant of your trading cost. So yeah, long story short for Bitcoin, weekly breakout looks good. Any high time frame dips into 38 to 32 should bounce, or are expected to bounce, given that's our support. The logical thing to draw from that, obviously, is if for some reason it were to fail, then the higher time frame picture for the first time in a long time would actually look ugly, right? On the daily time frame, the conclusions aren't too dissimilar. There's support at 44 and 46. It's doing its job, right, for the time being, so nothing's changed on the daily. The only real change would come from a breakdown below the range low at 44, and then I would say, okay, there's actually space to be bearish, and I'd expect some sort of retrace of the Elon candle should that occur. Andrew Gutierrez says, no chance we dip below 40. I'm not sure about no chance. I mean, your mindset sucks, right? This is the thing. I'm sure we have a lot of new viewers, but frankly, there are a lot of YouTube channels who will tell you X price never again, this will never happen, XYZ reason. But as someone who was buying the March crash, right? Like, I've been there at market extremes. You have to remember that most of us were looking at 7,600 as the level of support, and then we fucking blinked and price had dropped 50%. So for someone to come in and say no chance XYZ, I can't take that seriously, right? Even if the chance is low, even if the chance is so immaterial that you don't really consider it as your most likely scenario, shit like no chance is just really lazy analysis. And, you know, if you find those viewpoints disagreeable, then, I mean, fuck off and watch someone else, because stuff like that just doesn't help anyone trade, speculate, or do whatever. I mean, that type of reasoning is the reason people leverage up to the gills, never below X price again, and then they get absolutely rinsed because of this conviction built on nothing, right? So, come on, man, please do better. Okay, cool. So yeah, that's really Bitcoin. I don't want to spend more time than I have to, so to speak. The dump mostly has been retraced. We're at lower time frame resistance here. As long as this is intact, good to go. If not, I'd only be comfortable either hedging or selling below 44. I need a real breakdown of this daily level, and then there's a bit of space to capture to the downside, but that's not my primary concern for the time being. ETH. Cred, please do a video on your trade. I've got an article on trading psychology, which I wrote. It's okay. It's certainly decent. So there is some trading psychology content. Jim, I don't know what you're asking. And also, if you're asking me to comment on your position, I'm not going to do that. Yeah. Will ADL close my trade? It can close your trade. I mean, depends where you're trading, what contract you're trading. Not sure how it works. I mean, literally type in the exchange you're trading and ADL, and it will explain what your ADL level means and the implications of it. I'm not sure what I can do here. Anti-Defamation League. Do I consider pattern in your analysis? I consider price patterns, sort of, but for me it's all just about context. So I don't just blindly trade patterns. I'll see what time frame it's forming on, where the market is generally, does it make sense, etc., etc. Why are you even using leverage if you don't know how it works? Mate, I would bet that probably about 90% people using leverage don't know how it works. So that's sort of the standard. How do you use open interest in your analysis if you use it? Very discretionarily. If I think like, if it depends where it happens. I mean, sometimes looking for open interest flushes makes sense. Like if the market's really leveraged, funding's high, and the market's moving nowhere, you might have a reason to build a case for some sort of breakdown simply because of financing those positions, and frankly, paying funding becomes so burdensome. But I don't kind of have a clear model for OI up, price down equals X, and all those sorts of models. What initiates these flushes? Is it intentional, like whale games? I think all the whole whale games type of thing is pretty useless for the most part. And it's trying to personify the market in a way which doesn't really make sense to do. I think for most of the stuff that you read about like who is doing X, Y, Z, it's no specific single entity, right? It's more a culmination of factors which affect participants on the same boat. So, for example, if you have a lot of leverage, if you're in a highly leveraged trade, funding is also high, and the market's moving sideways, you're getting charged funding on your notional position size, and you're literally bleeding away with your liquidation moving closer with every funding period that you incur without price moving in your favor. So like a lot of the time, these flushes come as a result of a lot of leverage, for example, buying a breakout, funding bleeding them out, the market moves nowhere, liquidation creeps up as funding eats through your position and as your conviction drops, and then you eventually either get liquidated or puke because the costs of the position are too high. And when a lot of people are stuck on the same boat, that's when you get those exacerbated effects, right? Is there benefit to timing your trade entry exit around the funding period? Maybe is the answer, maybe, but not something I do. See, Richard there says whales are trading against whales. They're not making a plan to dump. Yeah, I mean, I just don't think it's helpful. Like, why not just try to understand the market, right, in terms of what mechanisms are at play at futures trading, and try to build a coherent picture of what makes sense, rather than saying, oh, these people are out to get me, these people are doing this to this group. I don't know, go play fucking video games or something if that kind of RPG world building is more your fancy. But for the most part, you can build a pretty coherent understanding or gain a sense of, you know, what forces are, you know, who's under pressure, etc., without going to the extreme of it's X versus Y or A versus B. You know, it's such a waste. And also, just mindset-wise, if you trade with the idea that someone's out to get you, so to speak, and someone's like hunting your stops, or there are these big whales who scoop up dips while you sell, it's just not. I mean, it's just a shit mindset to have, you know? Like, it doesn't help anyone. It really doesn't help anyone. I heard that it is the exchange who plays against customers. I mean, stuff like that. Even if it is, like, does that information help you? Like, what are you going to do with that, right? You can either learn how to trade it, or, I mean, having someone to blame won't make you a better trader, you know? Fucking hell. Anyway, I think I want to talk about ETH and ETH BTC. So on the ETH side of things, again, what's the higher time frame context? Well, look, we had the all-time high breakout and number go up. So that's good. There's nothing scary or threatening about that. The daily time frame is sort of, I just don't like it, which is a very helpful statement. But I allocated a lot towards Ethereum when the all-time high broke. I caught one good day of price action, and then it just went sideways from then onwards. Right, and for those wondering, my current exposure and has been for, I don't know, like not a week, 5-6 days now. I don't know. Timing is weird. In terms of my exposure to the market, I'm not hedged, right? So I've got full crypto exposure, and it's in Bitcoin. So that's sort of where I'm at. And if I feel the need to risk off, etc., maybe I'll tweet, maybe I won't. Doesn't really matter. But yeah, I'm positioned for continuation in Bitcoin at the moment, right? So yeah, look. For me, one of the narratives that I was keen on is that an all-time high break would send the market up a lot, right? And have this sort of momentum continuation wave. I do this all the time. But if we just compare with Bitcoin, we have the all-time high break here and, you know, You get 3 days of up, very clear sideways, and then just up infinitely, right? If you compare that to ETH, you had 1 day of up, sideways, and then this isn't impulsive, right? I suppose is the clearest way to say it. So I don't have any strong views with regard to ETH, simply because it's almost unreadable. It's up until proven otherwise, but structurally not as good as Bitcoin when it comes to levels, etc., etc. So I'm kind of going to let it do its thing, and if it changes or comes up, or, starts moving more reasonably, either with clearer consolidations or just more impulsively to the upside generally, I'll happily change my view. But for now, I kind of look at this and think, yeah, it looks fine, but I want no piece of it. I'd rather trade stuff that looks better to me, ETH is a mess. Yeah, I mean, a lot of the good traders I speak to are just like, look, it's going up for the most part, trend is up, etc. But in terms of shorter term trading, this thing, I'm not huge fans. And you can kind of see these ranges forming, right? Price sort of moves sideways, you get a nuke, the nuke gets bought, you enter a new range, it's not great. I don't like it. We will look at all the altcoins, of course. It's not a mess, it's just sideways. Yeah, I mean, true, but I mean purely in terms of this daily chart, right? It's nowhere near as clean, for example, as Bitcoin. ETH BTC is a really interesting one. I think you just have a couple of competing narratives, and it's really not clear which is the winner right now. On the weekly side of things, you have like a multi-month, multi-week breakout, etc., right? Which is the price was ranging here. Sorry, multi-year range, which broke to the upside. And just like this is the thing about ETH, right? The narrative that joins together the BTC and the USD pairs is that the breakouts have generally been unimpressive, right? So you have this really strong candle here, which broke out of this multi-year range, and then nothing happened, right? And it came back and retested the level ones. This is arguably the second test right now, but there's no continuation after what should have been a big level break. It's the same for the USD pair, right? Breaks all-time high and basically moves sideways. No meaningful or impulsive continuation from what should have been a big level break. Now, does that mean it's bearish? No. Does it mean that the opportunity cost could potentially suck compared to some of the stuff which is moving much more cleanly? Well, yes, right? So I think generally for ETH, as long as it doesn't fail the breakout, like a slow-moving breakout and a failed breakout are two different things. As long as it stays above the weekly range, I think it's fine to stay exposed if that's your preference. I think expecting outperformance is difficult unless this just really starts going. Like, this is the type of level where it really shouldn't be spending any time there, right? Like you've seen from previous videos, live streams, it's like one of those things. When you break that level, if the break is as significant as it should be, the market's got no reason to look back, for the most part, right? Probabilistically speaking. ETH has been the opposite. Every big breakout, it's just been looking back a lot and spending time there, and I just don't like it. It needs to do more for me to... Because again, I'm making like big portfolio decisions based on how a lot of this stuff looks, right? So I'm going to have a higher sort of standard of proof or requirements when it comes to reallocating meaningfully to anything but Bitcoin, really. So, yeah, that's ETH. Again, nothing bearish about this. It's just not as clear and doesn't look quite as strong as Bitcoin for the time being. So, on the altcoin side of things, a lot of DeFi just full retraced its dump. I think one of the clearest ways to look at that is actually DeFi perp for the time being, right? So if we look at it on an intraday basis, and again, TA on indices is a bit of a meme. This one is tradable, so it's slightly better than before. But, I mean, from the lows, yes, blah, 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 lower time frame resistance, etc. But this is a really strong bounce, right? As I've said before, if you have trend-setting liquidation events, the types which, bunch of longs gets licked and then any type of relief bounce gets sold and then you just drop another 50%, for example. This doesn't quite look like that at the moment, right? Even just measuring from the low to where the market is right now. Like, across the index, that's a 25% bounce in just today, right? In the space of not that long. I mean, look at this on the lower time frames. You have this capitulation event, and then it's just straight up. So that doesn't, at the moment, suggest to me that this is like everyone got liquidated, small bounce, and short the bounce, right? It doesn't. I don't see clear evidence of that. And if we look at some of the so-called blue chips, they seem to reflect that for the time being. Some better than others. So Aave, for example, still technically within its range, as silly as charting this may seem. Nothing has really changed structurally. And I think this is the thing that screws with a lot of people when it comes to DeFi alts, which is that if you look at this in terms of structure, it doesn't really look like any sort of pullback happened, right? It's just kind of moving sideways. But if we take the move from high to low, that's like a 30% pullback, right? Over 30% pullback. That's a lot. If we look at Uni, I mean, Uni's slightly worse. I think where's Sushi? I mean, Sushi is just absolutely mental, right? This thing is already set a new all-time high in the same candle that it dumped. I mean, look at this thing. So I struggle, as I've said before, I struggle to look at price behaving like this and to make the argument that this is a dead cat bounce, that you should short, it's bearish, etc. It just, to me, my current interpretation, with the evidence I have available, is that a ton of leverage got flushed, and there were real buyers waiting to scoop up on these projects, especially the DeFi stuff, at a very tidy discount. As always, my views are subject to change if good evidence emerges, but like, looking at what's in front of me at the time of live streaming this, it looks like a ton of altcoins were responsible for, there was like a mass liquidation event on altcoins, and then the real buyers stepped in, and that's where the market is at the moment. It doesn't look like risk appetite has shifted, you know? Cred, you seem neutral cautious when talking about BTC. I wasn't neutral cautious, but I'll read the rest of your question. What if Bitcoin crosses 50k and ETH BTC? How do you feel about preparing for that scenario, alts in general? As I said, I'm exposed to Bitcoin right now. That's me. Yeah, I'm not sure if it's worth adding anything to that. Eric says, I know Don's macro feelings on Bitcoin dollar, and I tend to agree. Oh, sorry, on BTCD and tend to agree. What do you think about... Yeah, look, I think if I want to get a sense of altcoins, I'll look at how altcoins are moving. I think looking at these indices and Bitcoin dominance, for the most part, I'm not convinced that those are useful indices to be following. Now, the slightly informal version of that is, I think most Bitcoin dominance charts, and especially TA on Bitcoin dominance, is an IQ test, and people who take it seriously have failed that IQ test. I think it's one of the most dog shit but widely spread indices that we use. But I would never say that on streams. Instead, I'll say I don't use it personally, and I don't think it's the best tool in the world for ascertaining whether altcoins are risk on or risk off. So there's always that. More institutions coming in, don't miss out. Man, where the fuck do these people come from? Do you know what channel you're watching? Like, I don't disagree with you, but like, read the room. Yeah, so to go back on topic, structurally, nothing's changed for Bitcoin as long as 44 to 46 is intact, right? ETH also looks fine, but is less clear to me structurally than Bitcoin. ETH BTC broke out on a high time frame, but again, both pairs have struggled with meaningful high time frame continuation. Some of the majors, some of the old guard are doing really well. I'm not sure where exactly they are in their cycle, but you can see that both, like, the altcoin bounces aren't limited to DeFi, right? That's sort of an important point to get across. Litecoin is pretty much retraced its big dump, which is one of the strongest ones as well. ADA, slightly less so. I mean, even BCH, right? Looking pretty decent, certainly against Bitcoin. And yeah, well, as you'd expect, the USD pair is flying at the moment. So like, I can't in good conscience look at even questionable or less interesting, or altcoins with less persuasive narratives bounce this hard and to be kind of risk off at the moment, right? I mean, look at some of this stuff. You had long wicks to the downside, pretty much fully engulfed. Now, that doesn't mean that's the bottom, right? Those of you who kind of know how I trade, I hate trading away from structure. So what you see a lot of really questionable trading education do is to have a level here, and then they'll say, well, okay, well, this is your support, right? And then they'll say, you wait for the price, you wait for price to come into the level, and then of course what happens is it's going to form, you know, it'll close like all the way up here and have a really what they'll call like a bullish wick coming through here, and then closing, you know, this is the high, this is the low, the close, etc. And then when the candle closes here, that's when you enter. I think that's not a great way to trade. Again, I'm trying to be really moderate with my language here. At the very least, that's not how I trade. If anything, I just generally don't like when there's a lot of distance between the candle close and the level which my system is telling me is important. If I'm trading well, I'm always trading at the level, not away from the level, not the candle close on top of the level, not the confirmation that occurs between the level and what price does. I like to trade at structure. I think that generally provides like my reads of how the market actually is, and my sort of interpretation of price action is best if I'm trading the structure that I think is significant. From an invalidation point of view, your risk to reward will for the most part be superior at structure itself versus away from structure. Trade management will be much easier because for the most part you either get some sort of bounce or you're blatantly wrong. So you get to manage positions from a position of strength rather than buying the candle close and seeing price immediately come back and retest, etc., etc. So something I don't do, and maybe this costs me in certain market conditions, but I don't really mind, is that I don't wait, for example, to get some sort of really strong daily close and then just straight up buy the daily close and put a stop below it, right? That's for the most part not how I trade. Now, I may be able to use that for like directional bias, that okay, we actually have a long tail and it closed above resistance, so that looks good, but I'll still then look to do business at structure itself, as opposed to just kind of almost lazily buying the candle and putting a stop below it. So that's just a quick note on, okay, well, you're saying that this is engulfed or done XYZ, how do you enter? Well, not at the candle structure, if that makes sense. One chart which I think also looks interesting, at the very least, is YFI. I know they've had some, I mean, they always have bad press, right? That's kind of the thing about YFI. But purely structurally, this looks like a all-time high break and sort of retest. After, again, context-wise, a multi-week, it looks like, consolidation. A lot of the DeFi stuff, for the most part, like the strike rate of all-time high breakouts failing is pretty low. If any coin is going to disappoint, it might as well be YFI. But I think it fell behind its peers so much during this range when everything was going up a lot. I could see this continue into price exploration if this level continues to be bid. That's around 42.8, 42.5, whatever. So within these kind of... Look, the main point is a lot of the DeFi stuff bounced. And if you're going to position for bullish continuation in DeFi, picking the strongest ones for at least the next leg is probably going to be a reasonable course of action, right? So as a result, the stuff which looks sort of in the middle of nowhere is not as compelling, like 1 inch, for example. It just seems to be stuck in the same range. That would not have the sort of primary basis of would not be the primary subject or object of my attention, right? Whereas you could give me something like sushi, which looks like it got completely hoovered up at the lows and is about to fully engulf the range it was in. Those are the ones which are more attractive for bullish continuation. I suppose a simple way of saying it, if your trade thesis is bullish continuation, pick the ones which look bullish. I know that sounds almost insultingly sort of straightforward, but you'd be surprised the mental gymnastics that people go through. Like, even if you compare these, like, which looks better for you to jump on, let's say, for a continuation trade? Is it curve, sort of at this range low, or, for example, is it sushi, which is about to engulf the whole range? Like, for me personally, it'll have to be the stronger pair. And again, looking at DeFi perp, it looks like, I mean, it's not necessarily going to break out in the same candle, but there's clear demand. Someone's, you know, there's a real buyer of these dips beyond what just looks like a dead cat bounce, at least from what I've got in front of me right now. If it changes, I'll try to tweet out and let you know that my views have changed, but this doesn't look like a dead cat at the moment, right? So people asking about LTC, and the USD pair is going apeshit, right? Which is cool. I think we talked about one of these ranges at some point, sort of levels at 170s, 130s, and then it's sort of at its local, another such structure at 225s. I think if anyone wants to, so there are 2 points about Litecoin, right? If you are interested in sort of the case for bullish continuation, etc., I think it needs to be through 220s, which is a weekly, daily level, etc., right? That's where it sold off from initially, and now it looks like this bounce is more or less heading back into that level. I'd rather trade continuation through resistance as opposed to into it, so that's something worth bearing in mind. But more generally, like, yeah, altcoin, like Litecoin's moving a lot. You might be looking for a setup, but as always, you need to consider what it looks like against Bitcoin. Because if everything moves, you don't want to be underperforming the things that are easiest to hold or the ones that you hold anyway, right? So we can kind of take a look at Litecoin, Bitcoin, and see, does this look strong or set up for continuation kind of in the short term? I'm kind of split. I looked at it before this stream. Now, if we look at it contextually, this thing has been downtrending against Bitcoin for years now, right? So that's important. Second of all, is there anything in terms of recent structure that suggests that the weekly is about to break out? I mean, it's a tough sell for me, right? I've tried being bullish LTC, BTC at a couple of stages, but it always seemed to just get stuck around this level within this range. And even opportunities I had to reclaim, like here, and to trade higher, it kind of failed. So I think until I see some sort of impulsiveness through LTC, BTC, maybe the USD pair makes that happen on this breakout, maybe not. But generally, with the fact that higher time frame downtrend, right? You can just see that just going down, and an absence of continuation on sort of more recent structure as well. You kind of need to make a really good case for allocating to Litecoin over Bitcoin, right? If that's what you're looking for. I'd say the sign of hope, if there is going to be one, is on the daily time frame, right? With this breakout and retest type of structure. But again, being very serious, if I zoom out and look at this, it's almost odd trying to make a bullet, like trying to find the bullish case in something that looks like this. And then you look at, for example, Sushi against Bitcoin, and it looks like that, right? Sushi against Bitcoin, I mean, barely looks any different, right? That's where Sushi Bitcoin is, here. So that's why I think alt BTC pairs are still relevant. How you allocate in your portfolio is obviously always going to be important. Even if a USD pair looks good in isolation, I assume most of you hold Bitcoin or ETH anyway. So it needs to, you kind of, it's worth comparing your altcoin against that major. And if your altcoin can't perform or outperform that major, then you're just taking on additional risk by punting it. Simone says, all these altcoins look bag holders. To me, no real use case. I mean, I don't think the use case is imperative for these things to move, right? I mean, I agree that old and maybe we need a bit of a coin market cap reshuffle type of thing, but they're still significant. And as we've seen with BCH and ADA and a lot of this stuff, and Litecoin even, it moves, you know? When a trade goes in your favor, is it better to take some profit or to add to the position? It really depends. I don't usually add to winners, but I don't usually add to losers either. So I'd say when it comes to taking profit, it should be a predetermined process. So, hey Cred, are you on Clubhouse? Yes, unfortunately I am on Clubhouse. Rogue makes a good point. When I agree with the difference between old coins and new coins is the new ones are in price discovery, the old ones have tons of price history above those levels with lots of holders. I mean, I broadly agree with that, but then you also have to realize even with the old coins, at a certain point, greed just takes over, or the supply demand becomes really imbalanced and even altcoins can get absolutely sent. So, I mean, Bitcoin's a good example of that, right? When we were at 3K, you had a lot of holders from 4, 5, 6, 7, 8, 9, 10, etc., but, you know, we still managed to break all-time high. So, I agree, but there are always limitations to that. Gal says, is it just me, or are more people charting alts versus USD now in comparison to charting alts versus BTC in 2017? So, it's not just about the charting, it's about the trading itself. You would be really hard-pressed to find tradable and liquid altcoin USD pairs to the extent that we have them now in 2017. It simply wasn't a thing. So you'd still have the alt USD charts, and on some fiat on-ramps, you could actually physically trade the alt USD pair, but for the most part, you were trading altcoins against Bitcoin in order to accumulate more Bitcoin. And certainly the altcoin futures side of things, apart from like Litecoin on certain exchanges, etc., was far less developed as well. Whereas nowadays, as we saw last night, right, altcoin volume, like altcoin futures against USD do an absolute shit ton of volume, and I think quite comfortably eclipse the volume done by altcoin BTC pairs, right? So it's not just about what people are charting, it's a reflection of what instruments are being traded the most as well. So, how do you determine taking profits in blue sky breakouts? It's really hard. I use round numbers for the most part. Like, it worked really well with sushi. You know, 2 to 3, 3 to 4, 5 to 6, that kind of stuff works really well. Some people use fibs, and kind of go, for example, from high to low and then get some fib extension levels higher up. I think that's fine. I think the point to be cognizant of is when you get those blue sky breakouts, it's not just you that doesn't have a clue where to sell. Nobody has a clue where to sell. So as a result, a lot of the memes and self-fulfilling prophecies and silly trend lines and all of that kind of stuff becomes self-fulfilling to a large extent. So... yeah, that's kind of, at least from my point of view, things that I think stand out and make sense. I've summarized it a million times already. Any questions? Anything not make sense? Should I go over something once again? I don't want to do chart requests, but let me know if you want me to cover something specific. And like the video if you learnt a single thing so far. Yeah, I mean, this is a good example, right? Like, how am I supposed to be bearish when something, you know, when this happens, and it's not just in one pair? How do you protect yourself from weekend drops? I mean, it depends whether I'm in a position or not. If I'm in a position with a stop loss, if I'm not, then I'm usually at my desk anyway. So, do you only do mental stops? No. Because it only needs to go wrong once with a mental stop for you to lose your account. So, why do people use FTX over Binance? It depends for what. I'm assuming for altcoins, one of the relative advantages is collateralization. Unless I'm totally pulling things out of my ass, because I don't really trade Binance altcoin futures. FTX lets you collateralize with a whole bunch of things, and as a result, and just generally the way they process and calculate liquidations, they do far fewer liquidations than Binance, plus the ability to collateralize with other stuff. I mean, those two things are related, obviously. That would be my guess. Maybe more choice as well. I don't know. Depends what you're asking. How many positions do you have open simultaneously? Honestly, usually like one. Sometimes more, but very rarely. Like one tends to be enough. Any general macro comments? Would you bet we are right now start of 2017 or start of 2018? Neither, I suppose. I don't really like the this time is different sort of argument, but it kind of feels like it. Because even these kinds of opportunities where if someone really wanted to push this down, or if there was real selling interest, that kind of liquidation cascade would be a great precursor for the market to take a huge shit. It's just not, right? People are buying this. So until I see that type of shift of behavior, where dips aren't being bought and all these rallies are getting stuffed really early, things look fine, right? Again, weekly, this is just broke out after consolidating for a number of weeks. Daily's holding stuff. Both Bitcoin and ETH are basically in price discovery or through all-time highs. Altcoins are being bid very aggressively whenever the dips present themselves. Yeah, I don't know. It looks decent until it doesn't, right? But it still looks decent for now. So I don't know where we are in the cycle. And I also think it's important to remember that a lot of the so-called top signals, we've been seeing a lot of them since 2017. We've been seeing a lot of them since 17K. So like all these celebrities coming in, doing this, that, etc. Like those things have been around since 17K. So clearly they've lost a lot of the expected predictive power that they've had. So does that mean we have to come up with new top signals? I mean, maybe when Gainsey becomes like maybe when one of us goes on like a national reality TV show or become like actual celebrities in the real world, that's the top. But I would be cautious in trying to impose a sort of portion of the market cycle on where we are now. It's just not helpful. And look, even if you are able to have that kind of predictive power, like it doesn't help you right now, right? So for example, if you could tell that the top was going to be here or something, it still matters a lot what you do between sort of now and price reaching that sort of area. So it's just, I think it's a distraction. I've tweeted to that effect before, that looking for the top, hunting for the top, etc., it just doesn't help you. So yeah. How much portfolio percentage-wise you allocate to a single trade? It depends on the trade. For shorter-term trading, anywhere from 1 to 5%, which is a lot, but that's kind of the range. If I have a higher time frame, sort of macro thesis-based trade idea, etc., for like something big, 10%, anywhere from 5 to 15% for those sorts of ideas. Yeah, I mean, Rob says Gainsey talking about buying Zcash on television. Yeah, that would be a good top signal. Or bottom signal for... No, it would be a top signal either way. Why is CT euphoric about alts while BTC is consolidating below resistance, just like it did at 20k? I'm not sure I agree with that analogy. Again, I think I'm certainly informed by... Look, I understand this level, it's fine. But the broader thing, I think, is we've had like a billion in licks, and it just like straight bounced with alts making new highs as well. From a high time frame point of view, I'd get bearish if 32k fails. From a medium time frame, I'd be looking to hedge or potentially sell if 44k fails. But I'm not interested in seeing this bounce off support at a level that I've already bought like 2 times and seeing a third one and saying, well, it bounced from support and reached resistance after the bounce, therefore the market is bearish. It just doesn't make any sense. At least not on the timeframes upon which I'm basing my analysis. And a lot of the CT is euphoric. A lot of the time you have to realize that's bullshit, right? For 2 reasons. One is, like, everything is up. Everything. Like, it's been impossible to lose money. Of course CT is going to be euphoric. I mean, how the fuck can you not be, right? You've just been printing money for literally months doing nothing. And to some extent, the less you've been doing, maybe the more you've printed as well. So, like, expecting a sort of massive dissonance between what prices are doing and how people feel when it doesn't make sense to do so is how you get wrecked. Like, if the market looks like a piece of shit, and then the market rallies into resistance, and then everyone starts celebrating, yeah, then you can say, oh, well, everyone's euphoric into resistance, etc. But when crypto's printing, I mean, of course people are going to be euphoric. It kind of loses a lot of its predictive power, in my view, if the context doesn't make sense. And the second point is you have to realize what CT is, right? You have a very carefully curated selection of a specific demographic of traders who trade in a similar fashion from the same parts of the world, have been here for a similar period of time. It's like an echo chamber, right? Even if you look at Eastern versus Western crypto volumes, like we're kind of not a huge deal compared to Asia, for example, right? So kind of your, like, CT being euphoric is by no means predictive of the market in itself, and it's not some like microcosm for crypto more generally. It's just not helpful in my view. What's the best coin to start mining for a first time thing? I would just not mine. Yeah, of course, CT is super fun. The people you can meet are amazing. The memes are amazing. Some of the calls and information, educational stuff, amazing. Like, it's a really, really good place. But to extrapolate that your personally curated crypto Twitter feed is somehow indicative of the market more broadly is just not true, right? Christian, I think I've answered that question. I've traded... Like how do you enter after a big move down? It depends where the big move down ends up. For me, it landed at an area of support that I determined previously, so I bought it, and number go up, right? Let me see what the other part of your question was. Oh, where would I bid BTC now? As I've said, I've traded this level twice, the 46.5. I probably wouldn't do it a third time. If we get a breakdown below 46.5, the next area where I'd like to play a bounce is around 44k. And again, it can go a bit lower, but like around 44k is where I'd play a bounce if we go lower. But who knows, right? What if this, for example, makes a higher high through here and then pulls back? Well, that's a new setup that's formed at that stage. So it's the idea of bids aren't static, right? It really depends. Grant says, question on altcoins, do you invest simply on price action rather than understanding the technology or project future? I think somewhere in the middle. I mean, yes, price takes a priority because a lot of good projects get discounted, a lot of shit projects pump really hard. So valuations in crypto aren't that, I mean, they're better than before for sure, but they're not extremely sophisticated, and I don't think the primary driver for price anyway. So price action, important. When it comes to the fundamental side of things, probably the furthest I go is a sectoral approach. So, for example, DeFi, and then within DeFi, like, is this a DEX? Is it spot lending? Is it synthetic lending? You know, what does it actually do? That's probably as far as I take it. Beyond that, not in my remit. Which Twitter account would you recommend for honest trading education? I got you. There you go. Okay, cool. So let me just summarize really quickly. Okay, BTC, 44, 46k support. Only looks rough short term. Below 44. ETH, meh, all-time high. Continuation. Look out below if BTC pair fails. Alts, ton of licks which appear to be bid. No strong evidence of dead cat bounce plus sell continuation. Engulfs, etc. Bull cont more likely. That's kind of the summary version of some of the stuff we've covered. So Bitcoin, Bitcoin 44 to 46k is daily support. Below 44, that might see some unwinding. That would mean daily support is broken, which hasn't happened in a long time. So that's sort of a level that I'm looking out for. On the ETH, it's kind of a meh all-time high continuation. It certainly doesn't live up to what Bitcoin did. And that's both in the BTC pair and the USD pair. So, you know, look out below, not even in kind of USD terms, like, oh, it's bearish if the ETH BTC fails. It just means it'll likely underperform. On the altcoin side of things, as mentioned, they accounted for a huge portion of the liquidations market-wide that we saw last night. And something to watch for when you get those liquidations is what happens after. And if what happens after is a dead cat bounce, which goes sideways and gets sold, then you have trouble, and it's likely the start of a higher time frame leg in the same direction as the liquidations. At the moment, I don't see strong evidence of that, like we saw with especially the strong pairs, your sushis, your atoms, your Litecoins, etc. It looks like there are real buyers for these licks, and the dead cat bounce scenario is less persuasive at the moment, which would suggest bullish continuation is more likely until proven otherwise. Does that make sense? Is that helpful? Do you kind of see where the reasoning comes from? And if it is understandable, if we can get to 200 likes, that'll be sick. If not, I'll probably survive. Tezzy says, as a beginner, should we concentrate on swing or scalp? This is something that I've changed my mind on in the last probably year or so. I used to think, well, just high time frame swing trading only. But then I realized screen time is probably the best teacher, and watching the market on low time frames is probably also one of the best teachers, as long as you do it intelligently and you make notes and you still have a high time frame understanding of kind of what you're looking for. So the answer is both. Like, should I scalp or swing? If I'm new, you should trade. And then your own style will probably emerge from that. But beyond just screen time, you need to be in the market as well. And if you're only trading swings, then the amount of screen time that you'll be privy to, and more importantly, the amount of time in the market that you'll be privy to will just be too low to progress as quickly as you might want to. So that's that. Okay, well, that's all I've got. Thank you for spending your Monday evenings with me. Hope you had a nice weekend. Let's see what happens. Again, the way my system works is all of this shit is subject to change. If it changes, which can happen on a dime, I'll probably tweet or do something helpful. But this is kind of what makes sense to me at the moment. Thank you for all the likes, comments, questions. Always fun to see what you guys find interesting. So thank you very much. A thank you, of course, to the show's sponsor, which is Bybit. You may find their links in the description below to support us and to support the stream. And yeah, Technical Roundup comes out tomorrow at 7 p.m., 8 p.m. UTC. So go read that when it comes out. I think that's all of it. Thank you, and see you next time.